Operations is also important for your business. It's important to be able to account proper delivery on milestones when they are reached. Have they been reached? Is it a matter of sign-offs on documents? Requirements documents have been signed? Is the customer in acknowledgement? That's key for the business. That's key for recognizing revenue, because revenue should be recognized when you have sign-offs on milestones, and not when the delivery team thinks that they've delivered something, because you may have one end saying yes, we finished it, but the customer doesn't agree with that. So another aspect of operational excellence is billing and accounts receivable. And in the Gulf region where I work, coupled also with the current financial crisis, this can be a challenge. If you're not getting your AR on time, then you may not be able to fund your organization to deliver more projects. If you are, for instance, late in collecting your money, if you are not properly managing the accounting and procurement departments by sending the right invoices to the right people on time, making sure that your billing cycles are predictable, making sure that your invoices are accepted on release. These are key criteria for success in order to make sure that your cash flow is coming in at the right time with the right value based on your deliveries and based on expectations set for the project. Because if you set your profitability to be at a certain percentage and you do work hard to get to that level and you meet your profitability margins, yet you miss collections, then you're back to square one, and that does not help you advance your organization to be able to deliver on additional projects. And then another thing also important for operations is to properly forecasting backlog for delivery in conjunction or in working closely with the delivery teams to be able to report back to management and say, based on milestones or based on reports delivered by the delivery management team, we believe that we can actually consume the following costs by this period of time, because we know that this project work is going to be delivered next month or the following month. Be able to forecast your costs properly. So that's another thing, another key thing for operations, and that will also determine your profitability on projects as well. Because let's say for instance that you have forecasted to deliver $2 million worth of business in 1 year, and you end up delivering $3 million worth of business, yet you are winning more projects but not collecting on time. So what ends up happening in this scenario is you've spent a lot of money, so you paid a lot of salaries, yet you're getting more business, but you're not collecting on time, and that burns your cash. So you're not able to put, for instance, performance bonds for additional projects. You're cash strapped. So that's an important and key element in making sure that you control your costs, and operations should be able to help you with that. Another thing that's important is to properly assess your customer satisfaction results that are reported by the delivery team, and to make sure that your operations team is properly reporting this data so that you can act on it quickly, because you don't want to lose business as a result of that.